Thank you everybody for joining us today. Going through GASB 96. First and foremost, let me properly introduce myself. Benally. I am a principal in the Phoenix office, and I definitely appreciate the opportunity to present this information to you today. And we definitely thank you for joining the webinar. I'm going to turn over to my colleague, Mike Dierlam, who's going to kind of explain a little bit his experience as well.
Great. Thank you, Wes. Yeah, my name's Mike Dierlam. I'm a principal in REDW's Phoenix office as well, and just excited to share with everyone else today. And again, thank you for being on the webinar. Wes, did you have any other comments before we jump into the material?
Oh, yes, Mike.
Yeah.
So, both Mike and I, work extensively with tribes in our practice, and are hopefully able to provide this information to you. But before we start, we're going to shoot out just a quick poll on where you stand in the implementation process. That just helps us kind of gauge, okay, where are people at? What other type of information you need? Really, just to gain some information from the group.
Wes, where do you find that most tribal governments you're working with are at in the implementation stages or in GASB 96 consideration right now?
Well, it's a good question, Mike. I think most of us we're just starting. So,
yeah,
that's why we felt like, there you go. Yep. We felt like this was important, this webinar. Obviously everybody has busy lives. And so, this presentation will kind of go through the guidance itself, just specific, information within the GASB. And then I'll be going through kind of, okay, what to think about when going through the process and how to actually implement it. So these are just, we figure this webinar would be useful to all the listeners on. All right, Mike, take it away.
All right, great. Thank you, Wes. All right, we'll jump into the objectives. We've got a lot of stuff to cover, admittedly. We're not going to be able to go into super deep depths into any of these areas. We want to give you sort of a jumping off point, make sure you've got the basics down so you can take those next steps and progress towards implementing GASB 96 for your tribal entities. So first off, we'll talk about what is GASB 96. We'll talk about the definition, implementation dates. I think a key area is scope consideration. So I think that's what everyone kind of has in the back of their mind. Well, which of my subscription-based IT agreements are going to be included in this standard, or what do I need to consider? So we'll spend some time on that. Some other technical items for consideration, and then what's this going to look like on our financial statements ultimately? What are the disclosures going to look like? We'll give you kind of a little bit of a glimpse of what that's going to look like. The second half, I'll turn it back over to Wes. And again, Wes is going to really try to take a practical approach, or, what are the, proper steps to take? What's the implementation roadmap? How can I create my initial schedules? And then how do I ultimately continue to comply and oversee GASB 96 going forward? And then we'll have a little bit of time again for the Q&A at the end. So jumping in on a definition, and one thing you'll see is just a lot of parallels here with GASB 96 and GASB 87, which of course everyone implemented last year, related to leases. A lot of the terminology is the same. The accounting treatment for how we're treating these SBITAs or subscription-based information technology arrangements is the same. So we'll be often, during this presentation, be referencing GASB 87 as sort of a barometer of how these two GASB standards relate to each other. So ultimately, GASB 96, again, subscription-based information technology arrangement. I'm going to use the term SBITA a lot because that's a mouthful to say repeatedly. So for these SBITAs, it's a contract that conveys control of the right to use another party's IT software. So if you're familiar with GASB 87, it's a very similar definition. The difference here being that instead of leasing another entity's asset, like leasing a building or leasing land, here it's the right to use another party's IT software. That right to use that software can be alone or in combination with other tangible assets. And it's as specified in the contract for a period of time. So it's got to be a period of time associated with this SBITA. And it needs to be in an exchange or exchange-like transaction. It can't be a $1 a year transaction or some sort of significantly reduced, price or something like that. It needs to be an exchange or exchange-like transaction. Previously, how we accounted for these, historically, these have just been recorded as payments as an operating expense or a functional expense in your governmental funds. Moving forward, a little more of a complex treatment is the reality. We're going to have to record an intangible asset and associated SBITA liability ultimately. Again, same treatment that we're talking about for these leases from GASB 87, where there's a right to use lease asset and a lease liability. Here, there's a SBITA asset and a SBITA liability as well. Common examples we're talking about here. This isn't all inclusive, of course, and just because something you're considering is on this list doesn't mean it's automatically applicable to GASB 96, but some common examples are cloud-based accounting and other software associated with that, data backups and remote storage, point of sale or other enterprise use software. Maybe think of, if you have one of your tribal enterprises has a scheduling, maybe your tribal, maybe you have a tribal golf course that schedules tee times, and there's a software used for that. Video conferencing software, we're on Zoom right now. Enrollment software could be from your human resources department or enrollment department. Cybersecurity, just a handful of examples there. All right, we want to kind of hopefully start with a basis of that we just recently adopted GASB 87 leases. So what are some of the similar terms and similarities, just so we can kind of start off something that we're at least somewhat familiar with since it was implemented so recently. So first off, the lease or subscription term is going to be very similar. It's the period which the tribe has a non-cancelable right to use the underlying IT asset. So same thing as GASB 86. You want to keep in mind here, and I think this is even more critical when we're talking about GASB 96 SBITAs, is who has the right to cancel the agreement. You want to become familiar with your subscription agreement to use these softwares and be aware of who has the right to cancel at any time or after a certain duration of time of the subscription. We want to understand that in large part to understand what is a short-term lease or short-term SBITA in this case. And that ultimately can scope out a number of these subscriptions. Is there a mutual option to terminate? Understanding that, is that in the terms? And we'll get into specific examples of this. But again, the concept is the same as GASB 87. The general recognition and measurement, the accounting for these is pretty much identical to what we experienced in GASB 87 with some very, very, very minor differences. Contracts with multiple components. I don't know how common this was with the 87, but it may be more common with 96, where we have agreements or subscription agreements where there's several components. There's a physical asset, there's a software portion, there's a maintenance portion, there's fees, different components of the agreement, and how we treat those, again, is very similar between 87 and 96. And then when there's modifications, terminations, changes, et cetera, to the agreements, the treatment, is the same between 87 and 96. Some differences on the left, you'll see leases, which again is referring to GASB 87. The right is our SBITAs, what we're talking about now. Previously, in 87 for leases, this is another entity's non-financial asset, an underlying asset. That's what it's referring to and dealing with. For SBITAs on the right here, we're talking about, again, another party, or we'll refer to them as the vendor or the SBITA vendor, their IT software, alone or in combination with a tangible capital asset. And then below that, you'll see, a minor difference in, controlling the asset. We're not controlling the right to use just any asset, but specifically for SBITAs, the underlying IT asset or software asset. All right, so first off, and I think, you know, understanding a short-term SBITA versus all other SBITAs is pretty critical. Short-term SBITAs, I think, are going to be applicable specifically if there's a lot of dual options between the tribe and the vendor to, you know, cancel the subscription at any time. So that's usually what you know, when this comes into play. So short-term SBITA is when the maximal possible term or the non-cancelable period. So there's no way that the subscription, you know, can, you know, or I guess I should say it's a non-cancelable period at 12 months or less at the commencement of the subscription. What that means, it's a non-cancelable period if neither party can essentially break that subscription arrangement. So if at the 12-month mark or the 6-month mark, you know, the entities have the option to cancel the arrangement, it could potentially be a short-term SBITA. With these short-term SBITAs, there's no recognition of a subscription liability or subscription asset required. These are just short-term payments expensed as incurred. For all other SBITAs, and this is going to be certainly a lot of these arrangements where maybe only one side has the option to terminate. So, for instance, if you're leasing some software and it's you know, a 2-year agreement, a 5-year agreement, or it's annual and you know, just, you know, one side has the option to you know, continue using the software or break the agreement. You know, those are all going to go into this bucket over here, where we're going to have to consider for implementation for GASB 96. And ultimately, similar to GASB lease treatment now, the asset is going to be amortized over the life of the agreement. And then there'll be a subscription liability being reduced over time through subscription payments, which, you know, if we're talking about governmental funds, that would be debt service, principal and interest payments. If we're in an enterprise fund or your tribe-wide statements, they're just a you know, reduction of the liability. All right, just, you know, time period, you know, when is this effective? Ultimately, the effective date of adoption is July 1, 2022. That means any, you know, set of financial statements, June 30, 2023 forward, you know, this GASB is applicable. So for those of us who just got through our 9/30 year ends or are approaching your year end of 12/31, this is applicable now, and certainly if you're you know, expecting your auditors you know, to you know, begin their work here in the near future, you're going to want to have all these ducks in a row before getting that audit started. So some exclusions, we'll talk about some of these. There's certainly a lot of information regarding exclusions when you go through the GASB guidance. This is not all inclusive, but it covers some of the you know, some of the exclusions that are probably going to be a little bit more common. So just in general, contracts that do not meet the qualifications, and what we mean by that is just the general definition. So it's got to be a like-kind exchange. It's got to be the lease of another, you know, another entity's, you know, IT software, et cetera. If there's service-only agreements, so if really the subscription is just service-oriented, it's not necessarily, you know, the right to use the software, you know, those would be excluded. Inter-agency software agreements, if there are some software agreements, you know, between entities of the tribe, would be excluded. Again, short-term agreements. Again, we'll repeat that again. Agreements having a maximum possible term of 12 months or less, and or having a cancel with convenience clause where either party may cancel. So again, if there's a clause in here at the 12-month mark, either party can cancel with 30-day notice, or, you know, whatever the stipulation is in the agreement, that could still apply, and again could be considered a short-term agreement, a short-term SBITA. Contracts that qualify as a lease under GASB 87, the bullet point below being when the software portion is insignificant. So, many things we may lease might have a software component. Maybe it's a piece of equipment and there's some software necessary potentially to run that equipment. If the software portion is considered insignificant, that lease is just going to stay as part of that GASB 87 lease. You don't have to, worry about it. We'll talk about agreements where there's a breakout in separate components, and that's potentially, listed out in the agreement. You may have a particular lease or subscription agreement where there's both components and they're broken out on the agreement. And in those instances, you may need to apply both GASB 87 and 96. Software an agency owns or has a perpetual license agreement. If it's a perpetual agreement ongoing, that's going to be excluded here from GASB 96. Again, just reiterating some of the real key ones here. Excludes contracts that solely provide IT support services, but includes contracts that contain both the right to use the software and IT support service components. So you got to be mindful of what you're actually paying for. What are you subscribing to? Are you just subscribing to the service, the maintenance or training or upkeep, or are you actually paying for the right to use that software? A couple of clarifications again on that short-term SBITA, because here's where I think a lot of the questions that we're fielding relate to this, and of course folks are digging into their subscription agreements and trying to read every clause and see if it fits the definition of a short-term SBITA. And I like the example here, which is why the slide is. So the department signs a contract to rent IT software. The contract says the term is 1 year, but the department can extend the contract for a second year at its discretion. What we're communicating there is that the tribe has the option to extend it beyond a year. The software vendor does not have a choice. Okay, if the tribe elects to, they can go ahead and add that second year. The department is, in this case, for the example, in this case, the department or the tribe is 100% sure they're not going to extend the contract. Is this a short-term SBITA? And this is an important example because the answer here is no. When we're talking about a short-term SBITA, we don't make the considerations of, do we think we're going to extend? Do we not think we're going to extend? It's really just talking about that non-cancelable period. And so it clarifies here, as long as the contract provides for the possibility of the tribe extending the lease beyond a year, and it's their sole decision, the vendor doesn't have a choice, regardless of whether the tribe exercises the option or not, it's still a GASB 96 SBITA. So hopefully that doesn't, GASB likes to keep us on our toes a little bit here, but that's how they're defining a short-term SBITA. A short-term SBITA only exists if the agreement's longest possible term is a year or less, or either party can cancel at 12 months or less within that first year. And then they clarify here, that calculation of that short-term SBITA, it's different from the criteria of determining the SBITA term. The SBITA term, once we say it's not a short-term SBITA, okay, it's not in that bucket. We're going to have to consider it for GASB 96. Then we start evaluating, well, how long do we think we're going to keep this? At what point are we reasonably certain we're going to continue using this software? And that's really for measuring the duration of the lease term, calculating that lease, that SBITA asset and SBITA liability. When there are combinations of IT software and a tangible asset, so there's a few things they emphasize in the guidance here. If the software component is more than insignificant, so the software is a big portion of this agreement that's breaking out different components of your agreement, of your lease, of your subscription, the agreement does fall under GASB 96. If it's insignificant, it's not going to be part of 96. Then in the second bullet point on the left there, if the tangible capital asset component is more significant. So now we're talking about an agreement where you've got a payment, there's a physical asset, maybe there's some software with it, and we feel that the asset is more significant. So the physical capital tangible asset is more significant, then the agreement is just going to fall and stay under GASB 87. This is when they're just giving you just a package. Here's the price, all things included. On the right is when we're talking about if the contract breaks out the software, the hardware, the services. Then again, that adds a layer of complexity, probably an additional layer of work if your subscription agreements do go to that level of detail. If they do, GASB is asking you essentially to evaluate those different components of the agreement separately. In there, they do say in the guidance, if the software is less than 10% of the value of the entire contract, then it's out of scope. Don't even worry about it. If it's more than 10%, you got to consider it for GASB 96. So as an example, you've got an agreement for a piece of equipment. Maybe there's a hey, here's the cost to lease or subscribe to the physical tangible asset equipment. Here's the cost for the software. Here's our service we're providing for you. All those things are broken out separately. The service portion obviously is excluded from all of this. The asset, we're talking about GASB 87 there. And the software, if it's above 10% of the value of the entire contract, you're going to have to apply the principles of GASB 96 to it. SBITA subscription term, it's really the same concepts as GASB 87. They talk about the government's option to extend or the government's option to terminate. It's kind of the same thing to me. It's just, I think they kind of overcomplicate it a little bit here. But essentially, if we're reasonably certain that we're going to extend, we want to include that in our subscription term. So if there's a initial 1 year and then an option to extend for 2 years after that, and it's solely at our discretion, and we're reasonably certain that we're going to use it for the full 3 years, then your subscription term is that full 3 years. It also talks about considering the vendor's options. So you want to consider that if it's I think it might be a rare case, but in the rare case where we're using a particular vendor and we don't think it is reasonable, we're reasonably certain they're not going to continue providing that software to us at a certain point. That would be where that subscription term ends. The subscription term does not include periods for which both the government and the vendor have an option to terminate the SBITA without permission from the other party. So if after the 2-year mark, all bets are off, either side can walk away, then that can't be part of your term. And again, if that's the case at the 12-month mark or less, then it's a short-term SBITA, and GASB 96 is not going to be applicable here. And again, kind of repeating the same thing in a different viewpoint, periods for which both the government and the SBITA vendor have to agree to extend the lease. Again, agree to extend, have the option to terminate, kind of same thing. Measuring the asset and the liability, again, really mirroring GASB 87 here, but the initial valuation of that asset and that liability are measured as the present value of the subscription payments to be made during the term. So we talked about what the term is. We're going to figure out, are we measuring it at 1 year, 3 years, 5 years, whatever it happens to be. And then you look at the payments, whether they're fixed or variable. When we say variable payments, we're talking about if it's indexed, to inflation or some other rate. We want to make sure that's incorporated into our calculation. And then any other payments to the vendor associated with the contract reasonably certain of being required. There's several criteria in considering, what payments go into this calculation. Ultimately, a lot of it boils down to this: are we reasonably certain that this is going to be required? We also want to consider incentives, and you'll see some bullet points there. But if they're buying you out of a prior subscription agreement or lease that you're in, other free subscription periods or reduction of payments, we want to consider all those things based on the relevant available factors and information that we have when we're measuring the subscription asset and liability. A few examples here of what would be included, what wouldn't be included. The preliminary projects stage, evaluating what software we need, selecting a vendor, what technology are we gonna choose. That's all just expense. That's really not part of what your calculation is going to be. The initial implementation, so actual implementation of the software, of the asset, configuration, coding, testing, etc. Those costs, should be capitalized as part of the asset and calculation of the SBITA liability. And then, ongoing additional implementation or ongoing operation, the maintenance, other activities for ongoing work with this software, generally are expense. There's a few exclusions that are defined in GASB 96, but for the most part, they're expensed. Okay, so when there are separate components, this slide, I don't want to go through every bullet point on here, but again, we're going to be distributing these slides, so I want you to have this information. But there are a few steps. You want to identify if there are separate components. Okay, do they break out in the agreement the difference between the piece of equipment and the software and the maintenance, or maybe it's just the software and the maintenance, or training, or fees, or other costs charged in there? You want to make sure we're breaking those out before we start analyzing things. Identify any non-subscription components. Again, the common one is going to be ongoing service or maintenance of the software. And then allocate the contract price. One term they use, which I think may be challenging as many are implementing, they do in step 3, the first point there you'll see is use prices for individual components, including the contract, as long as they're not unreasonable. I don't know how exactly you define that, what's reasonable, what's unreasonable, but if you feel like maybe the value or the prices that are being displayed in this agreement aren't really reasonable or don't reflect reality, you may want to use some professional judgment there, I guess, is really what it's recommending. And then, this just breaks down, once you have that, what's the approach. Identify the prices in the contract, make sure they're not unreasonable. Assign the contracts that are not unreasonable to individual components, really get your prices set, and allocate remaining contract prices to their applicable components, and then measure your subscription liability. Hopefully this isn't too common where there's too much analysis, but occasionally you're going to have contracts that have multiple components. Again, you're going to want to break them out and treat them separately, is ultimately what we're talking about here. Okay, discount rate. You do need to apply a discount rate when you're calculating the present value of the future payments. Most are not going to state that rate for you. Very similar to 87. Most governments, most tribes are going to use their incremental borrowing rate. You want to use the facts and circumstances at the time you're implementing this. Few things not to forget. Variable payments. This is another area where you may have some software that's excluded, but variable payments based on performance or usage of the IT asset are excluded. So is it based off of, let's say you're using a software, one of your enterprises that does scheduling, or if that software is charging you based on appointments scheduled or tee time scheduled, or reservations at an RV park, that's a tribal enterprise. If it's based off of that type of usage or performance, it is scoped out. It is excluded. Additionally, many tribes need to consider a policy and procedure update to address a couple of key GASB 96 principles that hopefully will make your life much easier. Potentially setting max date for reasonably certain for renewal subscriptions, meaning if you have ongoing subscriptions that, ultimately the tribe has the discretion to keep the software as long as you like. You may want to set dates of what we think we can reasonably say it's reasonably certain. Obviously, software changes. The software we're using today is likely going to be very different 3-5 years from now. So maybe adding policies and procedures to that would be beneficial. And then considering a threshold for SBITA implementation. Many tribes did this for GASB 87. They said, hey, any lease we have that's, in total is less than $10,000 or $15,000 or $20,000, we're not going to consider those. It's the same concept as capitalizing assets. And as long as it's reasonable based on your entity, could be a good approach, especially to avoid maybe some of those smaller, smaller subscription IT arrangements. And then this here, I won't get into too much, but just sort of what these subscription assets, subscription liabilities are going to look like on the left here on your capital asset or long-term asset roll forward. And then on the right, on the liability side, there's going to be a subscription liability, non-current, and a current portion. So that's really what how these are going to manifest themselves on your financial statements.